Stocks are back under pressure throughout our conversation there. Maybe a timely one with Zed. Russell got back down to the very lows of the session. We're going to talk some ETFs, S&P, also at the lows of the day. Cinthia Murphy joins us, investment strategist at TMX Vetify, always ready to talk some funds and the latest leverage getting built into our market. Great to see you, Cinthia.
Hey, Oliver. Happy to be here.
All right, so I guess firstly, just the natural rebalance of the NASDAQ with a couple big hot names going in is relevant for ETF investors firstly, because that's going to change the cues.
Yeah, so I think come December 23rd, we're going to get at least three big new stocks in the NASDAQ 100, which will be added to the queues. Palantir, MicroStrategy, and Axon, which is a defense name. Those are very popular names, as you know. What's interesting is if you think about it, anytime you get a big index rebalance, that means these positions will be added, three positions will be respectively removed. So we're going to be losing a biotech name, a pharmaceutical name, and an infotech name that is really in kind of the data service business, and getting like a software name, an everything Bitcoin name, and a defense name. So if you think about the Qs as some kind of representation of, interesting thematic opportunities for 2025, these are interesting tilt in terms of exposure that we're going to be seeing really, taking effect late this year and early next year.
The people know what they want, I guess. They want, high beta. They want action. And MicroStrategy, Palantir certainly have provided that. And a little bit different of a process than getting into the S&P and by consequence those ETFs. A little bit kind of more open-ended, I guess, the kind of NASDAQ processes. They want to target growth.
Yeah, it's interesting because, as you know, Oliver, we always look at the Qs as this kind of tech proxy and, heavy tech and disruption. It's really a non-financials index, but it has a really strong growth tilt. And what I think is it tells you something about, if you think about how much we focused about, for example, on artificial intelligence this year. It's been this conversation about microchips. You were just talking earlier about NVIDIA and the sell-off and the correction we're seeing there. Everyone is talking about the next phase of the big AI story being like your software. You start to really get, nitty-gritty on the application of technology. So to, have Palantir go into this index kind of maybe, tells you where the puck is moving on the artificial intelligence story. Like we're making a leap here of assumptions, right? But I just think it's kind of interesting when this index is kind of reflecting the narrative we'll be hearing, at least for an artificial intelligence opportunity. With Bitcoin, with the bloodbath we're seeing in markets today, Bitcoin is up a little bit. At least it was last time I looked. So
it's
that's
hanging in
there.
Hey, Cinthia, do you, in your research, in your experience, do you think there's a lot of validity? Is there empirical evidence behind the notion of inclusion begetting flows? Like, I remember it was some years ago when I was a reporter at Bloomberg, somebody did do a study that we wrote on that showed some pretty real alpha being available if you were to know what was going into the index, but once it's in there, and I don't know how much of that has been arbed away. Can you tell me kind of your thoughts on that right now?
That's a great question. I mean, some of the estimates I've been seeing, for example, from MicroStrategy, is that it's going to trigger at least to a $2 billion, kind of buying shopping spree for the Qs to be adding that stock on a weighting maybe about 0.5%. So if for folks that are out there, they want that growth, they are been looking at Bitcoin, they haven't really accessed or they want to expand on that position, knowing that MicroStrategy is in that index could encourage a lot of folks to buy it. I mean, you could argue, could encourage a lot of folks to take some money off the table if they think that index is getting really, really risky. But it could really trigger some asset flows in there for sure.
Okay, it sounds like kind of hard to quantify though. Sort of, I know with when it comes to crypto or Bitcoin or MicroStrategy, just kind of based on what I've seen from some of the news flow the last week, that they will take any kind of narrative and run with it. But I mean, there's some logic that look, once it's in there, obviously you're going to have people who don't even intend to buy it that are buying it, right? That's the kind of whole notion of being in the index and in the ETF. What else, Cinthia? That stuff is hot, but over the last 2 weeks, we've seen reasonable pullback in value, in small caps. I'm curious what you see from the flows perspective. Are they corroborating that, or are flows suggesting people want to go the other way?
Yeah, it's been fascinating because I was looking at all the flows, latest flows yesterday for the month, for the quarter, and there's a lot of money starting to chase value. There's a lot of money starting to chase small caps, a lot of money chasing dividend payers, and equal weight S&P 500 type of funds like RSP. So it's really ETF investors are really betting on I need to diversify. I need to take a little bit of a defensive position. Might as well pick up some income on the way, which dividend payers tend to be great for that. Like look for to a little bit more low vol. And so to see the market performance today and think where that money has been put to work is kind of an interesting disconnect. So it's on one side where hey, let's add crypto to the queues. On the other side is let's put a lot of money into value and dividend payers, and then just today we watch it all go down. So it's kind of an interesting dynamic there.
So it seems like flows suggest maybe some dip buyer or interest, I guess, that trade can come back.
Yeah, and I think at least from the conversations we've been having with advisors here at Verify, I really sense caution. There really is this. We're bullish, we keep going despite all the odds, but there is a sense of caution on what comes next. So there's been a lot of efforts to let's diversify a little bit and protect a little bit for drawdown. I think the concern about drawdowns is growing. So we'll see what a new administration brings early in the year and kind of sets the tone. But right now, I think folks at least in the advisory space, are trying to manage downside a little bit.
Of all the kind of ways to play that group, value, overlapping with small cap, overlapping with equal weight, is there any style or product that you see people most interested in to express their view in? Because there's so much overlap in those categories, but a lot of different ways to play it.
Yeah, I think there's been some interesting flows, and I think strategies that are very interesting is when they kind of overlap always through a perspective of quality. So avoiding those value traps. If you look for dividend payers within like of a quality value space, like a fund like CDGV, for example, from Capital Group, that's been getting a lot of assets. It has the dividend payers with a quality focus, but also from a valuation perspective. If you look at profitability as a factor, DUHP from Dimensional, really interesting fund. You have a valuation screen there, so you are value sensitive, but you're really looking only for really profitable companies, businesses, which is in a way a defensive play. So there's really interesting, ValQ, you value with quality. So it's kind of that defensive value that also is quality. You may not get to the cheap value, but you kind of like the good performing, good balance sheet type of value. I think those are all interesting ways to do it.
Great stuff, Cinthia. Always like the perspective. Appreciate the thoughts and good timing with some of the news flow.
Thank you so much, and happy holidays.
Likewise, same to you. Cinthia Murphy, investment strategist at TMX, Verify. Great stuff.